Ladies and gents, I would like to take a pleasure to welcome you to our 8th demo day. This is quite a moment for us, really nice. We have some people that have been with us from some of our early cohorts and a few additional judges that will be coming in. This is quite a nice moment for us. Always exciting when we get to our capstone presentation day, our demo day. So I'd like to, first of all, give you a big well done and a welcome for being here. The agenda looks like this. We'll start with a welcome. We'll move into some of the presentations, and then I will introduce Catalyze Connect. From there, we will have a small moment to aggregate all of the scores, which each of you will have the opportunity to vote. So just to clarify that, I'll be going deeper into this again, but we will have our People's Champion as well as our IC's Champion. And so there are 2 different prizes for each of those. And then we'll be saying goodbye for now. So to kind of give you a quick snapshot, I think a lot of you have experienced this deeply, whether in this cohort or in one of the previous ones, but this is what we went through. 5 weeks of a lot of, some would say, intensive sessions. With varied lectures, 9 modules, 6 lectures, and 1 Connect session. We're looking forward to having a few more Connect sessions as things continue. And then at the end of our fellowship, to wrap everything up, we have our capstone presentation. And so this is really the culmination of everything that you've learned, putting it together and throwing your own flavor into it. And so I for one, am really looking forward to the capstone exercises and the capstone assignments to see your own flavor of how you would put together a fund. And so that comprises of everything that you see on the screen here, from mandate, thesis, and team, to our investment process, our IC members, our theory of change, valuation framework, as well as some takeaways. I think that we'll see whether we dive into the takeaways that can be dependent on time. The rubric that we will be utilizing, all of my IC members, you will be utilizing this, as well as all of the people and fellows with us on the call today. We will also be utilizing this, where we will be looking to score each presentation, each team on this rubric, looking at content and structure, and scoring that on a scale of 1, being a bit of a poor display of that specific element, to 4, an excellent display of that element. The different criterion that we'll be focusing on is, like I said, content and structure, your investment strategy, and alignment to the pipeline that you present. The presentation skills of our various fellows when they present, and how we're able to see the teamwork come through, innovation and creativity, and then of course we'll also be diving into some of our some deep questions, and so the quality of these answers will also be a point for us to score. So just a bit of a reminder on how the type form will work. Before each presentation, Uma will share a new type form link. Or we'll share the same type form link actually in the chat. Once the group begins presenting, you can already start your scoring. We will still leave a minute after each presentation for you to actually submit and finalize your score. If you want, you can manage to refresh your link once you've submitted the score and start again for the next group. And the goal of this is to get to both our IC, our investment committee's champion, as well as our people's champion. For some of you that have not yet seen the type form, I know we have some esteemed guests from our sales cohort. This might be new to you. This is what the type form looks like. I believe Uma has posted it in the chat, so you can open it up already and have a look at it. Note here what kind of a stakeholder you are. For our sales fellows, those of you that are here to watch our capstone and our demo day, you can select alum over here, and then the rest is relatively self-explanatory. So some housekeeping, as always. Please do try to keep your video on, specifically when you are asking a question. In addition to that, also, once we get to the end, it'll be great to say a nice farewell. If you're not talking, make sure to put yourself on mute. And if you drop off or have any other questions, feel free to ask any of the CatalyzU team for some support there. We will be sharing a recording, creating some nice clips. So keep your eyes on the lookout for that. And with that being said, I want to pause and give everyone a real and virtual round of applause. We've made it to the end of our cohort, our C8 cohort. We have our special friends from Safaricom. Well done. We have our fellows that have joined us from around the world. Well done. We've made it. And we're really excited to see what you have to showcase for your journey with us today. With that being said, we're going to proceed now. We'll start off with group one, and then we will go into our IC questions. We'll do a bit of a round robin. If you start with the questions as our IC members, I will shift. I'll look to end with you in the next round. We won't be able to ask all of the ICs a question for each presentation, so please do put your hand up if you have a question. Feel free to drop questions in the chat, and for our guests that are here for the first time, if you have any questions, also feel free to put them in the chat. Our investment committee members, I would like to say welcome to all of you. Once again to Tahir, who is our thesis and mandate savant, if I can use that play on words, is one of our IC members. Yvonne Nasi from our friends at 54 Collective, another one of our IC members. Taylor Thomas, one of our, I believe, C4, C5 cohort members. C3, excuse me, let me put some respect on your name here, Taylor. Also joining us. And then Alan might actually be from a cohort before you, Taylor, or was it the same cohort as you?
No, I think he's even older than me.
Yeah, there we go. We have Alan from C2 or C1 joining us today. I think he'll be coming in a little bit later. And then also missing from this investment committee member list, we have none other than my co-founder, Mr. Luke Mostert, also an investment committee member today. All righty, everyone. With that being said, here we go. I am going to be welcoming up our first group, Popelo VC Fund. I have been enjoying your backgrounds. I had to take a moment when I came in because I needed to restart my Zoom. My background fell away, and saw that you guys all had matching backgrounds and had to come and ensure that I represented somehow. So, ladies and gents, I'm excited to see what you have for us today. Uma, can I ask you to get the timer going? Can you please?
I'm ready. They can let me know when to start.
Perfect. If you can spotlight my speakers. And then I will let the Popelo Fund kick off, and Uma will start the timer as you go.
All right, so I think representing Popelo Fund, I'll go ahead and start. So, hey everyone, so my name is Nick Nderi, representing Group 1, and I'll be presenting Popelo Fund. So Bopelo means life in the Sesotho language, and as the name suggests, that will also be informing the thesis of our fund. So the dream team leading this is comprised of Ibukun, Bongi, Eya, and myself. And between us, we have over 20 years of collective experience across various sectors such as market research, operations, management consulting, and advisory. Next slide. So when it comes to our thesis, so we invest in tech-enabled and impact-driven early-stage startups within the pre-seed to Series A stage, focusing on Africa's most pressing health and climate challenges. And we focused on health because it's one of those underrepresented sectors. We have so much demand on the continent to the tune of $66 billion needed annually to be able to achieve universal healthcare. And when it comes to climate, despite being, one of the lowest emitters, actually below 3%, we are actually disproportionately affected by climate change to a point where we are losing, 5% of our GDP annually as a result. Next slide. So as mentioned, we deal with companies within the PC2 Series A stage in the healthcare and climate tech sectors. And we focus on companies with a strong founder market fit with a clear market opportunity, as well as traction. And we put a particular focus on, companies that can deliver on impact in both of these sectors. And in terms of, the nature of our fund, so we're a $50 million fund, looking at a lifetime of roughly 10 years, and we're targeting an IRR of roughly 18 to 25%, and seeking 10 to 15% ownership. And the main instruments that we'll be working with will be equity and SAFE. Next slide. And so when it comes to our investment process, so we typically have the format that most VCs and investors use. So from sourcing, deal screening to due diligence, going on to signing the term sheet, investment committee approval, and deal closing. So a few highlights specifically on our investment process. So starting with the due diligence, in the sourcing phase, we'll be leveraging not only just our networks for pipeline and various events, but also partners as well. So within the healthcare space, we have entities such as Vilgro Africa and Jazarift, who are actively involved in building companies from the ground up. And when it comes to the climate space, we have entities such as Africa Climate Ventures, and Delta 40, who are also doing the same, and we could come in, as co-investors, while at the same time we could also provide some really good pipeline opportunities for us. And lastly, I would also like to highlight the post-investment stage, where we will be providing tailor-made support to each individual company to ensure that the company scale and have meaningful transformative impact across the continent. Next slide. And over to you, Aya.
Thank you, Nick. We are proud to be supported by a strong investment committee composed of experts in investment, but also experts in the health and climate sectors. So we have Ian Aboyeji, general partner and co-founder of Future Africa from Nigeria. We have from South Africa, Sawa Nakagawa, executive director of Alpha Mundi Foundation and founder of 3 Arrows Impact. We have from Tunisia, Dhikra Khalifi, which is the founding partner of the Sances Capital Ventures. From Kenya, Kanini Mutuni, Regional Managing Director of Africa Draper and Richard Kaplan Foundation. From France, Guillaume Loriot, which is Senior Investment Manager of Sanofi Fund. And from Senegal, Mariam Diop, which is the board member of ANCA and founder of Dakar Angel Investment Network. In terms of the startup that we invest in, these are 3 examples of startups of our pipeline. So we have Zensei from Côte d'Ivoire, which is an AI-powered platform offering virtual medical consultations, personalized health plans, and access to affordable medical devices. So far, they have 30K registered users, including 18 small business clients. We have also from Kenya, Sun Culture in the climate tech, a solar-powered irrigation system to smallholder farmers, boosting yields and sustainability and offering cost-effective IoT-enabled solutions. So far, they secured $12 million. And we have from Egypt, Maimon Health, which is a digital platform connecting patients to global network of specialists and hospitals, offering telemedicine, medical evacuation, and second opinions. And they've secured over 1,200 patients monthly across 14 countries. So when it comes to our impact framework and how we see impact, we try to balance profit with purpose. So we have target returns, of course, and target impact, which is 2 to 3 multiple returns on investment with a meaningful ownership for our LPs. And when it comes to impact, we contribute, or our startup contribute to 6 UN SDGs. We have the SDG number 3, health, the SDG number 8, economic work and economic growth, 11, sustainable cities and communities, 12, like responsible consumption, 13, climate action, and 15, life on land. When it comes to how we measure our impact, we usually try to set KPIs related to our investment and also to our portfolio, like CO2 emission, number of jobs that we created to our pipeline, access to healthcare, etc. And we try to collect data regularly, and we report on an annual and quarterly basis to our investors and LPs. We also have third-party verification to make sure that our numbers are accurate, and we use international framework like IRIS to make sure that our measurement is consistent and accurate. Finally, the theory of change. So we combine inputs from financing from LPs, expertise of our team, but also expertise from experts that we mobilize. And in terms of activity, we have two main activities. We invest directly in early stage startups, but also we provide technical support for our portfolio to grow and scale. This leads to each year investing in 10 to 15 startups, accelerating African-led health and climate solutions that are innovative. And the impact that we want to see in the long run is sustainable and scalable health solution, improving the quality of life of millions of Africans, while strengthening climate resilience and reducing the vulnerability of community to climate change across the continent. Handing it over to you, Nick.
All right, thanks, Aya. So when it comes to valuation, we take a balanced approach where we try to have basically a good balance between the qualitative and quantitative aspects of the business. And this is mainly done through a combination of three methods that are relevant to the characteristics of the potential portfolio companies that we'll be looking into. And this, to be specific, this includes revenue multiples, the scorecard method, and the discounted cash flows. And these will be weighted differently as well, depending on the company in question that we'll be looking into. Next slide. And when it comes to portfolio management, we stand on three pillars. So number one is value addition, where we provide hands-on tailor-made support based off of information that we also get from the due diligence stage. We will be tracking information that will inform of the performance of the company and interventions that are needed for the company in question. And lastly, we'll have follow-on strategy, where we'll be working with external partners as well, in terms of also being able to get strategic financing. And this could be across the instruments, depending on what our companies need most as we continue to work towards our exit. Next slide.
Quickly, key takeaways. We need more African representation in the VC space, and we're happy to be part of this fellowship. You are two women in our team, and we're happy to represent the VC space in Africa. The second thing we learned about how to identify startups that are backable and the power of flow, and the lecture with Luke was amazing and helped us a lot in understanding the approach and the field. And finally, networking, meeting other fellows, and learning about what's happening in different ecosystems in Africa. Thank you. Last slide. Okay. Thank you, merci, and asante.
Trying to remember how to say well done in French, but well done, right on the money there with the timing. Let me hand over to my IC members. I want to see if there's anyone that wants to kick us off. If not, I am going to go ahead.
I'm happy to kick off. Oh, well done on a great presentation and making the time limit. That was good. I just have a quick question. So it's almost like there's two parts to it. So it's pre-seed to Series A, right? So the one part I have is on like your entry points, and then the other part I have is on support. So pre-seed companies, because we did this with our first one, they need very different kinds of support than Series A companies. So how are you juggling the two among the four of you? And then the other part is, do you always enter at pre-seed, or do you enter at Series A as well? And then is there a follow-on strategy?
Thank you, Tahir. Let me hand over to someone at the Propeller Fund.
So when it comes to the specific level, so you mentioned between pre-seed and Series A. So for us, we would like to come in the earlier sections, though we won't shy away of getting companies that are closer to the Series A stage, if they're a good fit for us. And when it comes to splitting the the work between us. So we'll be sharing the work, within the team itself. And in addition to that, we'll have more people come on board as well to be able to assist with matters to do with portfolio management, as well as being able to provide this hands-on support to the companies. And something that's also helpful as well is kind of like the journey that the companies have already been on from other areas that we'll be sourcing pipeline from, such as guys like Evilgrow, within the healthcare space, guys like Africa Climate Ventures who've already done a bit of work in the companies. And so for us, it's just coming in and complement work that has already been done before.
If I can just add. Oh, go for it, Aya.
No, just to add, I mean, we'll focus on the pre-seed, seed, and we will build partnership with other VCs that are tackling Series A in order to have the follow-on investment and make sure that our startup, when we invest in them, have also other VC opportunities.
Yeah, I just wanted to add in terms of our roles and responsibilities across the four of us, more specifically in terms of supporting pre-seed and Series A, I would handle due diligence across the startups that we are engaging, and Aya also does venture building, so which just supports what Nick was saying around the hands-on support that we give to our startups. Thank you.
Thank you very much. Taylor, let me shift over to you. Do you have any questions?
Yes, thank you. Really great presentation, guys. And I think climate and healthcare are really exciting spaces to look at, greatest growth potential, I think. You mentioned you are raising 50 million. I was wondering what average ticket size you are targeting, how many investments are you wanting to make, more clarity around those sort of terms.
Thank you, Taylor. So as a team, we're looking to, the reason why we're a $50 million fund is because we're looking to invest in about 10 to 15 different startups every year, and within the range of $100,000 to $500,000. So that's the average or usual ticket size that we invest in, potential startups that we invest in. Then we're also open to co-investing and opportunistic investments. But the average investment size is $100,000 to $500,000, and a target of 10 to 15 startups every year.
Thank you.
All righty. Sorry, I don't know if there was another question coming in there. No?
Yeah, one from my side, Carl. I saw you guys are looking to utilize two instruments, namely safes and then also full-on equity agreements. In what situations would you use the one versus the other?
Thanks for that question, Luke. So when it comes to equity, I think this would apply for companies that already have priced rounds, while for the safe would apply to companies that haven't been priced yet. But it's something that will happen down the line.
Okay, thank you.
Thank you very much. I see members to here. I'm going to ask you to hold that burning question and see if we can hand that over to the next group. Ladies and gents, I want to say well done on that presentation. That was our first one. You now have a little bit less than a minute to fill in your type forms. Bopelo Fund, I am watching the entry of these type forms. Do not try to be sneaky over here and submit type forms for yourselves. With that being said, I am going to give you another 30 seconds. And in the meantime, can I get Savannah Fund up here? Uma, can we pin them to our videos? Here we go. Okay, group two. I hope we are ready. Are we ready? Can you unmute and let me know?
Yes, we are ready.
Perfecto, Seneca. All righty. Mike.
All right, hi everyone. I can go ahead.
Please do. The timer has started.
Hi everyone. So this is Savannah Capital Fund, basically known as SCF. So in Africa, we have around 400 million people that live like 2 hours away from health facilities. And also we have around 85% of people that actually have mental health issues, not seeking for adequate health or care. And then we have around 67 million people in West Africa, East Africa, and South Africa that are actually starving due to food insecurity and then lack of sustainable agriculture. These forms the basis for our mandate and thesis. And our mandate is basically to be able to invest in scalable agri-tech and health tech from the pre-seed stage to Series A stage, basically focusing on SaaS solutions, companies that give SaaS solutions to address the issues of food insecurity and then healthcare inequalities. With that in mind, our thesis is also has to basically leverages that, but we have a philosophy of early entry, maximum return, where our thesis focuses so much on companies that are going to ensure precision agriculture, telemedicine, AI diagnosing, and also driving sustainable and scalable and sustainable impact in the areas of agri and then health. So with the fund strategy, we have our fund size as $50 million. Our ticket size is we are looking at $500 to $5 million investment in each startup. And the instrument we hope to use is equity, convertible notes, SAFEs, and the revenue-based financing. So our investment process has to do with, we basically, during the deal review or sourcing process, we leverage funders networks. We also look at partnerships and then referrals and then angel syndicates to be able to source VCs. We also during the screening look at VCs that have sector and market and model fit that has market potential and are also sustainably scalable with cost effectiveness. With due diligence, we ensure that we do a couple of number of due diligence, including financial viability and due diligence. Our investment committee looks at risk return, exit potential, and then strategic fit. And during the deal structure or investment execution, we are looking at equity investment, convertible notes, and then revenue-based financing as well. So once we invest in the company, we also make sure to be able to support them in market access and partnerships, help them operationally grow, and then also support in impact performance tracking and monitoring. We are looking at mergers and acquisition, follow-up funding, and then public listing as our exit strategies. Next slide. So our IC members includes Mr. Patrice. Mr. Patrice is the founder and then the CEO of ARM, and he's also the founder and chairman of African Rainbow Investment that is known very well in investing in startups and also impact-driven VCs. Mr. Vusi is also the founder and then CEO of Mangrove Fund Venture. And then he is also he has so much passion, especially in the investment areas of technology and AI, and then health as well. Francis is a young investor who is very passionate about early stage investment, and he is the co-founder of Innovate. So these are the VC members that we have in our portfolio. So in our pipeline, we have these three companies. Kena Health is actually a South African-based health that provides telemedicine care to ensure equity in health access. So with this model, we are looking at they are actually in the seed stage looking for $2 to $5 million investment, which we are also considering. With October Health, they basically have developed an app to ensure mental health access in the health ecosystem. We are looking at, they are also based in South Africa, and we are looking at $500 to $1 million investment. And then with Complete Farm, they have marketplace where they actually provide end-to-end digital farming platform for commodities for farmers based in Ghana, and then also at the PC stage, looking for $100,000 to $500,000. So with our impact dimensions, we are basically looking at impact measurement approaches with the VCs, where we shall be supporting in investment and support after the investment. We are looking at also measuring the number of farmers, and then also the number of people that are actually seeking and adopting telehealth, looking at short and medium term changes, and then long term transformation. We actually have so much impact when it comes to the UN Sustainable Development Goals, and these are the development goals that we have direct impact on. My colleague Michael will take us through the TOCs.
Savannah Hi, everybody. My name is Michael. Sorry, I'll begin again. Savannah Capital's theory of change focuses on various aspects, but keeping time in mind, I'll just highlight the problems, the assumptions that we had, and the outcomes. So a key challenge that's faced by the agricultural sector in Africa is to do with low productivity and weather variability. So agri-tech is dominated at the moment by hardware solutions. So there's a gap for scalable solutions, which are SaaS related, and as an outcome, we seek to contribute to solving for accurate weather predictability and better yields, thus creating food systems that reduce dependence on imports. Another problem is the access to marketplaces where the economic value of the yields that we addressed above can truly take place. And in this sort of space, there's still a lot of room where there's still heavy reliance on physical marketplaces to create digitized ones. And as an outcome, we look to create greater access to digital marketplaces, transparency, with the aim of contributing to bridging the gap to this economic realization. Limited to access to healthcare is also something that plagues the continent, and for this, we seek to contribute to accelerated digitization to universal health coverage. And finally, where we have problems with diagnosis and under treatment, we look to focus on solutions that increase patient engagement and chronic disease management. We aim to use various methods of evaluation depending on the stage of the venture that we're dealing in. And we've listed them before, but just as an example, using discounted cash flows at Series A, or maybe even using the Berkus and scorecard methods for pre-seed and seed. Market multiples could be used as part of exit. 50% of the fund will remain as follow-on capital, and we have a 10-year horizon. We are looking for a target ownership of a minimum of 10%, where we prioritize pro rata rights, board seats, or advisory positions, and liquidation preferences. Our exit strategy, in terms of our exit strategy, we envision the following: that 60 to 70% will come from mergers and acquisitions, 20 to 30% from secondary sales, and less than 10% coming from IPOs. Next slide, please. Our team consists of a diverse group of experts across the continent, and we bring together deep industry knowledge, investment experience, and on-the-ground insights. The team is made up of Jasmine, Noko, Samuel, and myself, Michael. Next slide, please. As part of our portfolio management techniques, we look to active portfolio monitoring, where we track performance indicators such as KPIs, performance indicators that are revenue growth, customer acquisition, and burn rate, the customer acquisition cost, that is, and ongoing monitoring to make sure that we align with SDG metrics. We offer hands-on guidance, mentorship, advisory, and operational support to our portfolio companies, and facilitate connection to customers, suppliers, partners, and investors. We offer honest guides to startup fundraising, sharing insights from experienced professionals to help startups navigate the complexities of securing investment, planning for an IPO, or even positioning for an acquisition. We, as part of our strategy for board meetings, will hold pre-board meeting calls with the executive team, board meetings quarterly, and also finally offer guidance to teams in terms of that. The takeaways that we have, two of them are quotes, and one of them is about an actual lecture. The first is from Luke. As a VC, you mustn't be scared of businesses dying. You should let them die. It's part of the game, and then you move on and focus on the winners. And Jay let us know that they love failures, and that's where they get the most learnings from. These were really great for us because they made us realize that we will fail potentially across the journey, but we can focus on the winners. Last one.
Let's go. Last one.
Okay, so financial modeling lecture. This is really great for us in terms of a hands-on practical ability to be able to create and build out a financial model for a venture. So Belandi did a really great job at helping us put together this practical component.
Team SCF, thank you very much. Mike, Seneca, well done. I will now hand over to my IC members. Tahir, I left you with a burning question. I'm giving you the opportunity to kick us off here.
Oh, thank you very much. That question will not be passed on to you. agri, I think food security and health tech, it's sorely needed on the continent. So I think it's a nice, strong, impactful segment to sort of target. I wonder which of these questions I should use. Okay, maybe just looking at support, right? So you mentioned Ghana, South Africa, Tanzania, and Kenya. Like, is that where your current team is situated, or how did you come across, or how will you actually end up supporting businesses across those different regions? Because they are a little different in terms of tax, in terms of business culture, you know, in some cases even language, depending on what you're doing. So it'll be particularly prevalent in agri, which is rural. So how are you going to manage all of that?
So we are from the territories that we named. It wasn't with Kenya, sort of South Africa, Ghana, and Tanzania.
And I think to add on to that, we also have practical experiences. I, for instance, I'm the CEO of Farmers Farm as well. That basically deals in crop and then animal health, poultry, and then I do crop farming. So basically have like hands-on experience on the need for agriculture and then how to be able to scale and then actually have great influence when we are investing in those particular VCs that have those as their aims.
Thank you. Carl, can I ask one more?
Sure.
Okay, cool. The 50% follow on, right? So I'll just trying to understand that part of it. So like, what are you doing a normal sort of 5-year investment period, or is it 4-year, and then your 50% comes after that, or is everything within that 5-year period? And then just also trying to understand that relative to your portfolio strategy. So what is your targeted portfolio fund size, and then how much of that are you going to follow into?
Don't all jump at the question at once.
Sorry, I was just
okay. Maybe just answer the first part there. That's right. That's all good.
Okay, so just speaking about the follow-on, yes, we're aiming at 5 years, and the follow-on would come after that. This is just in case we might want to reinvest, for instance, or if something has gone wrong, but we still see promise and we want to add more to the equation for the company, or the venture rather, in this case.
Thank you very much, Mike. I want to see if any of the other ICs have any questions. I have one. If not, Taylor, lead us away.
Great. Very, very cool presentation, guys. So one of you has, I think it was 9 years experience in healthcare, which is great because it's a very complex sector, highly regulated, as you know. With regards to agri-tech, I was just wondering what your strategy was there. Do you have expertise in the team? If not, do you have other strategies to source agri-tech companies, partnerships, or anything alike?
Yes, thank you so much, Taylor. So like I said, I am into farming in addition to being a pharmacist with over 9 years of experience. But then the idea is with the experience we have, we are supposed to leverage that. In the case where we need extra, we are looking at other companies that are in the ecosystem like Cow Tribe, who are masters in the agri-tech, to be able to provide follow-up kind of support for the VCs. Since we also have some partnership with those particular entities, we have partnership with Boehringer Ingraham. That should also be able to, we should be able to leverage those partnerships to support the VCs when they are falling on the rocks, to provide technical and then strategy guidance.
Thank you.
I think I will have to save my question for a little bit later. Well done, Team SCF. And everyone, you have a little bit of a head start to finalize your type forms. If you need a new link, it's in the chat, but you can also just refresh. And as we are wrapping that up, let me invite Patisi up to the stage. Alrighty. Oh, Simba, I've never seen you looking more ready.
Let's see if it will translate.
Alrighty. Uma, you will give us the heads up once everyone has been pinned.
Okay, they can let me know if they're ready.
Yeah, ready to go.
Kick us off, sir.
Okay, the timer started. All right, we are CatalyzU, Seed Capital Impact Investment Fund. Next slide. With $40 million available for impact investment, aiming to provide a 10% IRR over a 10-year horizon. We seek to invest in seed and Series A African startups, providing investment at ticket sizes between $200,000 and $2 million at a 10% minimum. We believe by doing this, we'll be able to on to the next slide. We agree with the World Economic Forum when they say Africa's economic growth will be greatly helped by how it adopts digital economy innovations. Key to note here, by 2050, Africa's population will be 2.5 billion people, a quarter of the world's population, thereby necessitating investment in the key sectors I previously mentioned. Why CatalyzU? We are four people from 3 different continents with 36 years of experience and expertise across a myriad of different industries, investment banking, technology, and social impact. And we believe this will be able to allow us to provide great returns to our investors and catalyze growth on the African continent. Our investment process on the next slide is such that we identify, nurture, and scale high-impact ventures in fintech, energy, logistics, and transportation. We do this by seamlessly integrating 3 steps listed on the right of your page. First, deal sourcing and market intelligence. Secondly, screening and due diligence. Thirdly, investment and growth acceleration. We conclude our deals by providing tailored investments, giving mentorships and strategic support, and our mission is to drive sustainable growth and financial inclusion through impactful investments. So how do we do this? On the next slide is our investment committee of heavy hitters, top experts who guide our strategy. To your far left, we've got Kevin Whale. He's the CPO at OpenAI, and he was the former head of product at Instagram. He leads our committee providing fintech and innovation expertise. To your middle, we've got Tanya Barnes. She's the managing partner at JP Morgan Asset Management, and she offers deep financial and investment expertise to our committee. Finally, we have Elias Masilela, chairman at DNA Economics, and he ensures strategic and economic impact. On to the next slide, you will see our valuation framework. What we do here is we use a combination of 4 methods. First, the multiple-based valuation. Secondly, the Berkus scorecard. Thirdly, discounted cash flow. And here it's for startups with predictable revenue, and the venture capital method to estimate exit values and expected returns. Of course, we adjust these methods to reflect impact-driven financial returns. Now, what deals do we have in our pipeline? Our pipeline includes companies across the 3 sectors I previously outlined. Firstly, we've got Duka on your far left, a Techstars-backed Kenyan logistics platform that connects manufacturers directly to small-scale retailers. Secondly, we've got Lenda. This is a Nigerian fintech platform offering fast collateral-free loans to SMEs. And finally, we have Open Access Energy, a South African energy management platform that enables independent power producers to sell electricity using existing grid infrastructure. I'll hand over to Sakshi, who will take you through the Duka deal.
CatalyzU is committed to unlocking Africa's economic potential by backing high growth, and Duka is a perfect fit. Founded in 2021, it's a Techstars-backed Kenyan startup transforming retail supply chains. It helps small-scale retailers source inventory, access short-term financing, and streamline deliveries. Duka is scaling fast, revolutionizing retail across Africa. It has already raised $2 million seed funding, $2 million seed funding in 2022 from CrossFund, Techstars, and other investors. On to the next slide, please. Duka operates in a hybrid revenue model that leverages commissions on goods sold, logistics fees, financing margins, and has impressive plans to expand to cover sub-Saharan Africa by 2035. On to the next slide, please. Coming to the market opportunity for Duka, it operates already in a massive $227.5 billion market, covering retail, logistics, and credit. The serviceable available market for Duca is already a whooping $94.1 billion, focusing on urban and peri-urban retailers and supply chains. Assuming a conservative 2% penetration rate, Duca's serviceable obtainable market is already at $1.88 billion. Industry insights highlight 15% of informal retail is via wholesalers, 30% of logistics is tied to B2B, and 30% of SME credit demand is from retailers, making Duca's digital solutions highly relevant to the sub-Saharan African market. On to the next slide, please. Coming to Duca's market revenue growth. Duca is on track for 3x revenue growth in the next 5 years, expanding beyond Kenya into the 6 East African countries. The first year revenue, as you can see onto your left, comes from the wholesale margins, logistics, and financing fees from Kenya operations in year 1, which is already at $8.9 million, growing to $31.3 million by year 5. The steep rise from year 2 reflects phased expansion into these new markets, with a conservative 1.5% penetration rate of SAM in these regions. Duca's phased expansion positions it for rapid scale-up across East Africa, tripling revenue within the next 5 years. On to the next slide, please. This doesn't come without risks. Firstly, there's a risk of supply chain disruptions due to dependence on third-party providers, impacting customer retention. Secondly, there's a high customer acquisition cost because small-scale retailers may be slow to adapt, requiring high investment in education and onboarding them. Thirdly, there's competition. Duca operates in a fragmented market with already strong players like Vasuko and Twiga Foods, making differentiation crucial. And that is why CatalyzU is helping Duca address these key risks, because we know that this will be valuable for their long-term success. So Duca isn't just about profits. It drives economic inclusion by empowering small-scale retailers and improving supply chain proficiency. On to the next slide, please. Coming to CatalyzU's impact framework, our impact framework is a blueprint for change, built on 5 pillars: financial inclusion, energy access, economic growth, market expansion, and social and environmental outcomes. We track success again through key performance indicators like the number of startups we fund, the percentage increase in SME productivity, and the survival rate of startups after 3 years. But beyond numbers, I would like to say it's about real lives transformed, retailers accessing credit, SMEs scaling, and communities thriving. On to the next slide, please. Coming to our theory of change. The core problem CatalyzU identified is that early-stage impact startups struggle with funding, mentorship, and investor confidence. Our interventions include seed capital, personalized capacity building, and access to networks. In the short term, we see greater stability and collaboration. In the medium term, we see startups scale and even attract institutional funding. Ultimately, this drives systemic improvements, economic growth, and leads to stronger social and environmental outcomes. Handing it over to Simba again.
Our exit strategy, we forecast that our exits will come from strategic acquisitions or secondary sales of shares to other investors during future rounds. In the case of Duca, what we've done is we've just showed some of the exit opportunities that exist. Logistics companies such as DHL, e-commerce players in the Kenyan market such as Mkopa, and investor sales to other investors who have shown an interest in last mile delivery platforms like Adinia and TFG Labs. From a portfolio management technique on the next slide, in addition to the capital we provide, we seek to support startups with performance management, where we monitor revenue and runway, as well as provide strategic oversight and support through pre- and post-board meeting preparations. And finally, we keep investors informed about fund performance on invested capital, IRR, and quarterly startup performance updates. The next slide. From a Duca perspective, the team has 25 years of expertise in logistics. Notably, the CEO worked at DHL. And secondly, as well, they've got 15 years of experience in information technology, which positions them for success in the retail logistics sector. Finally, if I can just do our team, at CatalyzU, we come from diverse sectors: technology, finance, investment, and social impact. This will allow us to create scalable, sustainable funding solutions. I'll just do one key takeaway. From here, we learned that a clear mandate defines fund scope and investor expectations, ensuring aligned decision-making. Thank you very much.
Thank you very much, CatalyzU. I see I'm going to try and avoid the conflict of interest we have here with Tahir being butted up. And I would like to start the questions. One quick one over here, looking at the valuation techniques that you spoke of. You spoke of 4 different techniques. I want to understand how you're balancing these 4 different techniques. Is it company specific, or is it a consistent methodology that's used for all companies? Do you maintain consistency?
I think I'll take a tab at it. I think our first go-to is always the discounted cash flow method. And secondly, we understand that for pre-seed, it might be a bit early for discounted cash flow, and we couple it with Berker's scorecard. We also follow by the exit strategy. We know that Duca, for instance, Duca has already received a $2 million funding, and it was essential for us to look Duca in a from a lens of having an exit strategy in place. We often do not keep exit strategy when we have pre-seed, but for already those startups that have a very clear pathway, they have their revenues at hand, the numbers are very specific and very exciting, we always have an exit strategy at place. So we do play with different methods at place. We definitely have a discounted flow method and Berker's scorecard in hand, but exit strategies for specific cases like Duca, which have very impressive numbers and a very high market potential, already have thought through their ideas.
Okay, thank you. That's a clear answer. Yvonne, Taylor, I want to hand over to you two. Do you have any questions for us?
Sure, I've
Taylor.
got one if Yvonne, you're good.
Go ahead.
Cool. I wanted a really great presenting, by the way, guys. Really, really, really well done. I think I want to just elaborate on where you are focusing your investment mandate in terms of the stage of the startup. Are you focusing on pre-seed, seed, or Series A? And does that differ from sector to sector?
Yeah, sure. Okay. Someone's going to go.
Simba, we lost you in between. Maybe you were trying to answer Tyler's question.
But maybe a suggestion here, maybe switch off the video. I think that they're currently having a few bandwidth challenges over there.
I can take up that question. I think when we Simba, you're back. You want to answer Tyler's question?
Sorry, you can go ahead, Sakshi. This is keep dropping off. I'm not sure what's going on.
Okay, great. I think, Tyler, because we are in an impact investment space and we are operating in fintech, energy, and logistics, I think for fintech and energy, especially energy, we would like to see at pre-seed stage, especially because at pre-seed, when the companies are developing their ideas, we want to help them how to have a formative kind of research to understand their consumers, to understand the key needs of the countries and the continent in a much better way, especially because we understand that energy access is directly tied to sustainable development, and there's already been a lot done in that space. However, the pathways are not as clearly sketched out, and that is why our key interest with energy is pre-seed. However, with fintech, we go for both pre-seed and Series A, especially because of the depth of the ideas. And we've also noticed that when companies progress to Series A, there's still some of their impact indicators specifically are not as how should I say, are not as fleshed out as they should have been, and not achieved by the milestones that they were thinking of. So there we look at both pre-seed and Series A, and also help Series A companies look at fresh length, go back to the drawing board. Whereas for logistics, I think my team is very well equipped to answer, but I would just like to add that that is where we look at Series A, of course, for obvious reasons, because the market is very well understood. But this is according to our experience.
Great answer. Thank you.
Thank you, Sakshi. I will say thank you very much and well done, Team CatalyzU. We have a little bit of time now, kicking off for you to all finalize your scoring. A reminder from the CatalyzU team: we can see when you are voting for yourself. Do not do it. There may or may not be some penalties that we start incurring for voting for yourself. With that being said, I'm going to get the next group ready to present Nyota Capital, the people building the future with daring founders. Alrighty. Team Nyota, are we ready?
Fantastic, yeah. So thanks everyone. So today we are excited to launch Nyota Capital, and you're looking to build the future with daring founders. Next slide. So we're excited to be launching our $100 million fund that is focused in investing in early stage technology startups in the creative economy space. We are looking to invest ticket sizes between $500,000 to $5 million per startup. And this is in businesses working within the creative economy sector that includes digital content and media tech, gaming and esports, creator economy, and tools for creators to build services, fashion and commerce, and then live and immersive experiences, with 50% of the funds reserved for follow-on investment. Next slide. So why Africa's creative economy? So number one, Africa is home to budding and growing mobile smartphone penetration, and we think this will just enable more people to participate in the digital economy. We are also the youngest continent globally, with 75% of the population being under 35. And then finally, the creative economy is projected to contribute up to 4% of Africa's GDP, which is a massive opportunity from a business perspective. And then just looking at the impact angle, it's an opportunity to catalyze a generation of more than 20 million jobs. Next slide. So our thesis is anchored, along three key pillars. The first one, touching on the smartphone penetration, which enables more people to participate in the digital economy, meaning we are able to then monetize Africa's creative economy at scale. The second one is a growing young consumer base who will keep on driving demand for entertainment, gaming, social commerce, and digital storytelling. And what we are also most excited about is a globalization of African culture and content at a global stage. Next slide. So our investment we have a lean investment process across 5 key buckets, and we screen and source for companies based on, are they in Africa, are they aligned to the sectors we are looking at within the creative economy space, market opportunity as well, and then team traction and impact potential. In terms of due diligence, we initially look at the commercial, financial, and technology viability of these businesses, and then this goes all the way to working very closely with the investment committee in terms of final approval, and then portfolio tracking and exits. Next slide. So we are guided by our advisory board, which includes seasoned founders and serial entrepreneurs. So Strive Masiwa is a businessman and philanthropist with 20+ years experience within the venture capital space. Ori from Kenya is a serial founder with a lot of experience in technology, media, entertainment, and has also had 2 exits. And then we have Yaya Maikori, who's a legal expert within the creative and media space. And the reason we, picked him is because, it's a nascent space, so we need a lot of advice from a, legal perspective. And then finally, in terms of gaming, we have Anne Shongwe from South Africa, and we work very closely with this team for final deal approval. Next slide. We have an exciting pipeline of 3 companies. Wowzy, which is an Kenyan company that's connecting influencers with brands to market and push their products. What we like about them is they're bang on aligned with the fund's impact area of job creation, but they've already scaled and grown into 23 plus countries, and they're at looking to raise their Series A. And then we have Exab, which is Africa's first online gaming arcade. And what we like about them is the fact that they're building, a tech-enabled high-growth business in a large market, and have only raised $500,000. And then finally, we have Sea Monster that is building, digital content and monetizing AR, VR at scale. But also they build, games that impact games that go beyond entertainment. So we're really, really, like the team as well. And for all 3 companies, we already see potential, exit paths to some of our existing funds. So I'll hand over to Tola to speak about the impact framework.
For our impact framework, we're in alignment with SDGs 8, 9, and 10. And we are investing in companies who have alignments with sustainable production and digital distribution, building affordable tools and platforms for creators and job creation for the youth, and ensure data privacy and ethical and responsible AI practices. We will be tracking key metrics on job creation for gig workers, number of creatives upskilled or trained, content that shows authentic African narratives. We would also be tracking ESG progress and share impact reports highlighting key successes and areas improvement for each company. Next slide, please. For our theory of change, some of the assumptions that we've made is the lack of availability of capital and resources, key partnerships, and the startups' participation in this ecosystem. The implementation of growth strategies that are effective for local markets and that can scale across the globe, and for government facilitation of policy changes. We believe that the impact that would come out of this is economic growth, sustainable job creation, as I said earlier, and an explosion of global quality content, especially African content, across gaming, entertainment, and media. Next slide, please. For our valuation framework, we would be focusing on pre-seed and seed stage companies for our first checks, and we will be investing as Series A in companies that show high growth potentials. And we're hoping to maintain an ownership of 10 to 15% per company. So in our first investments, there will be pro rata rights that we would request from these deals. And we'll be investing about 5 to 20 million at a 5 to 20 million post money across pre-seed to Series A deals. We assume that our exit pathways would be M&As, IPOs, secondary sales, and distressed exits, prioritizing M&As and secondary sales within a 5 to 7 year time frame. I will hand over to Francis to take it off.
Yeah, so I'll cover it. So in terms of the team, so jointly we have 30 plus years experience in investing and working with early stage technology startups. Tola himself being a founder, and Francis working in the venture building space. Myself, I've worked in VC and innovation for the last 12 years. Next slide. So on the portfolio management techniques, so we look at active portfolio support to ensure our founders succeed. And for our companies, what we do is business development support, mentorship and advisory, including working closely with them around ESG and impact tracking support, and then also proactively, looking at exit strategy reviews. And then for our LPs, we do quarterly portfolio reports with very clear metrics, and also just keep them appraised in terms of the fund performance, looking at where we are currently in terms of the net asset value, potential exit strategies, and awareness in case of any liquidation events. Next slide. So key takeaways for us from the cohort, we just summed it up in 3 buckets. Startups go through a trial of sorrow, and this was the lecture by Luke, where the initial enthusiasm fades and reality sets in. So it's always all about how do you support and encourage companies going through that phase, and then also just talking about portfolio strategy, diversity, etc., where venture capital firms don't invest randomly, right? So there are multiple factors which determine where to allocate funds, and finally, investor confidence and market trends plays a major role in startup valuations, and that's why using our valuation framework, we've tried to ensure that we maintain a certain shareholding in terms of equity, which will then guarantee us good returns. So that's it, and yeah, building the future with daring founders. Thank you.
Thank you very much, Nyota Capital. Well done. Perfect timing as well. Yvonne, I want to see if you want to kick us off with some questions over here, and then I will hand over to Tahir after that.
Sure. Great work, Nyota. I just have one question. So how do you intend to handle regulatory uncertainty, especially because in the entertainment sector, for example, in Kenya, it's been very erratic and it's difficult for influencers, for example, to get recognized and backing when it comes to compliance, when it comes to making sure there's some sort of structure. Have you thought about this?
Yes, so that's a good question. Thanks. And it's why we did, acknowledge there could be some challenges and difficulties from a, regulatory legal perspective. Hence why, we onboarded a hire as one of our legal experts with a lot of experience, in creative and media, just to advise us. And also on the theory of change, one of the things we did mention and reference is working closely with some of the, regulating bodies, especially within entertainment and media, just to try and lobby and influence policy from a long-term perspective. But that's definitely a gap, that we've picked up and looking to work closely with a legal expert to assist us on the same.
Thanks, Kevin.
Thanks, Kevin. Tahir, over to you.
Thank you. Great presentation. One of the things that stood out to me very early on was that 1.5% fee. There are a lot of VCs on the continent complaining that the 2% fee isn't enough, but you are advocating for 1.5. So I just want to know, what's your reasoning around that 1.5 versus a standard of 2?
Yeah, so that was informed largely by the fund size. So if you notice, what we ended up putting as investable capital is roughly, $85 million. So it was purely based on the size of the fund, and we believe, with the lean team, that should be enough to cover the expenses etc. for the team. Hence why the 1.5%.
Maybe if I can do a follow-up quickly.
Go ahead.
Yeah.
Okay, it's not really a follow-up, but thank you for the permission. So question 2 is, I actually really liked that slide that you had on that nexus on decision-making around investment, where you said these are the investment ranges and these are the targeted ownerships, and then this is that slide. This is the exit potential, and there's different numbers and ranges in this. So it actually, there's a bit of mathematics going on, and I'm assuming that's informed by the big deal or brighter bridges or whatever that is. I just want to ask, I really like the slide on the investable valuation range. How are you determining the value at that point per investment within that range? So what methodologies are you using at that point?
Yeah, so in terms of methodology, so number one, it's informed by the our ownership strategy. So for each stage of the investment, we're looking at anything between 10 to 15%. And in terms of the actual method, so it depends on the stage of the business. So where it's very early on, then we're looking to potentially leverage the Bacchus or scorecard method and revenue multiples as an option, and then later. Along the funnel, we would consider then aspects as DCF valuation perspective. Yeah. Sorry, Tola, go ahead.
No. I was just reiterating what you said. Later on in the process or in the funnel would be using the DCF method for later stage companies at Series A or post-seed.
Thank you very much, Nyota Capital. Thank you very much, Tola, Kevin, and to the rest of your team. Well done. And as usual, I will give you guys a little bit of time to wrap up your scoring, and we will get ready for the next group. A sector-specific fund, the African Logistics Fund. I would like to call you up. Samber, looking ready.
All right, you can start.
Okay.
Cool. Hi, guys. We're the African Logistics Fund. We're trying to catalyze growth through innovation in Africa. Next slide, please. Yeah, so we are a $51 million fund. We're mainly focused on clean and climate tech, logistics, and supply chain around Africa, working with companies on the African continent, and we're aiming to bring a 30% IRR to our investments. We're looking to empower Africans to drive impactful change within their communities by leveraging expertise, our experience, and local expertise. Next slide, please. So our fund size is $51 million. We're mainly focused on companies within pre-seed and seed and Series A. Investment size or ticket size is 75,000 USD to 5 billion USD, with various options of investment, including equity, debt, grant, but this is only for pre-seed. And our key focus is logistics and transport, with clean tech, climate tech being the key focus areas. Again, we are mainly focused on the African continent. So in terms of the investment process, we're almost sourcing our investments through founder engagement, tech events, accelerator programs or incubator programs, and also other VCs on the continent. Like many other VCs, our screening criteria is around screening, is from deal sourcing, due diligence, IC review, further due diligence, IC approval, and then hopefully an exit strategy. So our advisory board is put together by 3 people who bring experience from clean tech, mobility, and logistics and impact across the African continent. We have Sheila, who's a sustainable energy and gender expert. She has experience in driving clean energy tech solutions across Africa via the UN. We have Raphael, who's a co-founder of Jumia Travel and GoCada. He has proven experience in scaling businesses within Africa and offers vital operational experience and market expertise. We also have Ijoma, who's a financial inclusion leader, managing director of FSD Africa, big expertise on the African financial markets, and she'll offer us strategic guidance on fund deployment and sustainable growth. In terms of our venture pipeline, we've identified 3 companies that fit well with them. This is GoZem. GoZem is a logistics and fintech company with a mix of corporate market segments, and they're operating in 8 countries across Africa, offering employment to 12 million drivers across those countries. We have Wasoko, a platform that helps small SMEs and emerging markets connect with vendors to sell their products and supplies. They're across 7 markets within Africa. They have a deep expertise of local community and networks. And finally, we have Pargo, a smart logistics company based in Southern Africa, allowing customers, companies, and couriers to send and receive parcels across stores in South Africa.
Hi, I hope the logistics sector here doesn't make too much noise for you. So these are the impact things that we're trying to, these are the things we're trying to make impact in. We chose 4 main ones. Some of them are quite clear, like climate impact, really trying to go for CO2 reduction within our investments. And the second one is economic growth. So trying to grow the jobs within the sector in the countries that we're investing in. And the third one, which has already been touched upon quite quickly, is gender inclusion. So we're trying to bridge this gap. So go for gender diverse founding and try to increase the participation of women in the transport and tech sector. For example, here in Liberia, 95.5% of all people working in logistics and in transportation is a man. And I think we, with our investments, can change that a bit. And the final thing is financial access. And we've put together 4 impact metrics, one for each of our impact types. So first of all, CO2 reduction is a major one. Second one is market access and female leadership. And finally, funding distribution. I'm ready for the next slide. So this is our theory of change. We start with the problem, and that is that there's too little investment in climate tech startups in Africa and too little in female-led ventures. And with our input of capital, we try to have more startups funded and supported, and this growth in women-led ventures. The main outcome is that we have CO2 reduction and more female founders in mobility and climate tech, as well as a better startup ecosystem. And the main impact will be that we have lower emissions and economic growth in these sustainable industries. So this is our valuation framework. As with the other teams, we're also focusing on, or not focusing, we're also using a very multiple method for the valuation of our companies. This is mostly based on the stage of the company and the company type. Discounted cash flows will be used for companies in later stages with already an EBITDA to calculate with, and for pre-seed companies, we're going to be looking at other ways to evaluate this company. So 50% of the funds are for future rounds and 50% of the funds are for now. And we expect a 5% success rate at 40x if we invest 1 million in 20 companies, which would mean that we will earn 40 million after 5 years after investing 20 million. So our exit strategies are quite diverse as well. Most of them are for acquisitions. So for GoSam, we've already listed some companies that might be interested in acquisition in the future. Also for the other pipeline deals that we have thought of. Another part is secondary skills, and 10% is for a public offer. So for GoSam, it's mostly Uber and Bolt, so more the logistics sides, and for the other 2 companies, it's Alibaba, so more on the company and sales side. So this is our team. We have a very diverse team geographically, where I'm located in Western Africa. Michael and Kamal are located in Eastern Africa, and Ray is located in Southern Africa. We also have very diverse backgrounds, which is very important. Clean tech in the logistics sector is very much policy driven. Ray is the one that has most experience in policy development and could therefore help us find good companies in good countries with good policy for investment. And then we have some people that are more on the engineering and innovation side, looking at new startups with new engineering and innovation, and we can best see which companies are best to invest in. Second to last slide. So this is our portfolio management. It's about quarterly performance review. So how do we review our fund? We've listed several more VC KPIs, but we're also looking at these impact KPIs that I stated before, such as the CO2 and the women involvement. And apart from offering funds, we also want to offer guidance and advice. And I think it's time to go to the last slide for the last 30 seconds. So the key takeaways for the cohort. A lot was for us about due diligence, maximize how well you can assess a company on all these different types of due diligence that are there. Also, what is very clear for us that you have to have a strong and clear mandate for the fund to have direction and know how to evaluate the performance of the fund. And finally, what I like most is that all topics were linked to a real case study.
Thank you very much.
Thank you.
Well done to the African Logistics Fund. Well done, Kamal. Well done, you. Thank you for the presentation. I'm going to hand over to my IC members. I see Takia, very experienced in this game. The mic is unmuted and ready for the questions. Let me let you lead us.
I had no idea that I was unmuted. Oops. Okay, cool. The 30% IRR, that's a big delta between what you're targeting and what people are actually doing. So I just want to understand what enables you specifically to get that 30% versus others not.
Yeah, so like we said, due diligence, and a lot of our sourcing of companies will come from people we know, a lot of referrals, a lot of referrals within our network. So it's companies that we trust. And then with a lot of the support that we'll be giving the companies, we'll be aiming for that 30% IRR.
Thank you very much. Taylor, let me hand over to you.
Thanks. To hear you stole my question. But really nicely done, guys. I liked your presentation. So just on the logistics market, it is very saturated in Africa. So I was just wondering, from your point of view, how will you mitigate this sort of competition risk or differentiate yourself with your target investments? Yeah.
Thank you for the question. I think it's saturated in the urban areas, and in the rural areas, you're not getting so many startups in that space. Hence, we have picked Wasoko in our pipeline because it's serving the rural areas. And the rural areas is where 70% of the population is actually staying. So Wasoko might seem like it's not doing well now, but it's unlocking a new segment of the market. That's why players, unicorn players like Flatware, might be interested, because we will be looking at new merchants that will be opened in that space. So in the urban areas, we are now looking at smarter solutions, hence Pago, not just general logistics, hence picking Pago because of the smart urban solution that they are coming up with. I think that's how we are differentiating, and that's how we are penetrating both segments of the market. Thank you.
Very cool. Thanks.
One question from my side. Quite a big range in terms of the ticket sizes that the African Logistics Fund has, all the way from 75K, I believe, up to around $5 million. How does this affect your portfolio construction? What percentage of startups are you trying to focus on in those different categories?
Yeah, so I can go. It depends. It really depends on the stage of the companies that we're going to be investing in. We try to stay with companies over time as well, so we want to proceed doing multiple investment rounds with them as well. So staying with the companies, starting small, growing bigger. And in general, I think that the average ticket size will be somewhere about between $500,000 and 1 million, not all the way to the 5 million, but most ticket size will fall in the mid of this range.
Thank you very much. I want to see if any of my IC members have any other questions.
I do have one question.
Okay, we can hear you now. Go ahead.
I just have one question from that same thing. Looking at your 75K to 500 to 5 million. Looking at gender, when gender in transport is actually just male dominated. What are you doing at the 75K level to actually build that female pipeline so that you can allocate more to female-owned companies?
I didn't really hear the question. I'm very sorry.
If I can repeat what I heard was, Ray, did you hear it?
I got pieces of it. I think that he's asking that logistics is a male-dominated area, and what are you going to do to be inclusive on the gender aspect? We're witnessing a rise in female riders and last-mile solution deliveries, especially in rural Africa, where there are solar battery-charged scooters that are mainly being used by women. And basically, we hope to translate these women into commercial spaces. They are now using them for carrying firewood, water, and all of those, but we now want to influence and change those into commercial use cases going forward. So with the population as well of women, we hope they will take up this opportunity if it's quite forwarded to them. Thank you.
Thank you for that answer, Ray. And thank you for those questions to my IC members. With that being said, I'm going to give you guys a few seconds to wrap up your scores over here. We'll move on from there. Okay. So as we wrap up on the scores for our last group, we have our team in the back end busy auditing the scores, assigning those penalties. We have your names very clearly written there. We'll see what we have to do with those certificates that will be going out a little bit later on today, tomorrow. That is a joke. But yes, I want to remind everyone to make sure that you fill out the endpoint survey. That's something that's really useful for us. It will be one of the requirements before the certificates are issued. That allows us to understand how your experience was, what you enjoyed, what could have been better, where we can improve. And that's something that's really important to us. We really value our alum. That's something that we really value, our alum. And the more we understand what you guys want and what you like, the better we can actually serve. With that being said, I'm going to pause, stop talking, and share a video about Catalyze Connect. This is where you all will be shifting. We spend quite a bit of time getting better and better at understanding how to help our alum. And we feel like we're at the best point that we have been. And so you guys are joining Catalyze Connect at the right time.
There's no sound from my end, Carl. I'm not sure if everyone else can hear.
Yeah, the same with me. I can't hear anything.
Can you guys hear me now? Yeah?
Yes, now I can hear you.
Okay, but you didn't get to hear anything about Catalyze Connect. So let's see if I can do a good job at explaining it without the previous audio. I think I have some problems with my Zoom over here. So Catalyze Connect is our marketplace. It is a closed marketplace where not anyone can just come in and join. We have our vetted and trained alumni that are part of this marketplace. And here, what we try and do is showcase to you jobs that are highly tailored to you within the startup space or within the venture capital space. I believe there are people over here that can testify to it. Hopefully Tahir is one of them. And with that being said, moving forward from here, what you can do is tailor your profile, and from there, we will start looking to actually direct jobs to you. Something else that's very exciting over here is that we have been doing something that we call our synthetic job matching process. And so what that is really a process that we take you through. We shoot different jobs to you to really understand what kind of jobs you're interested in. This allows us to better tailor the kind of opportunities that we give and send to you, whether it's sector-specific funds that you're interested in working in, only looking to work in the logistics sector, or if you're only interested in working in East Africa for pre-seed and seed stage funds. So you go through this journey with us, and it usually takes around 3 weeks. We build a holistic and complete image of what your preferences are. So that's something that Uma will be reaching out to all of you about in the coming weeks. With that being said, that process allows us to utilize our largely machine learning system to match you to different opportunities. So we have your profile as well as all of the different jobs that come on the market. The second that a job comes onto the market, we see whether it meets your preferences. And that's how we are able to share the opportunities with you. So please opt in to Catalyze Connect in your endpoint survey, and we will reach out to you. With that being said, the moment that we have all been waiting for, it's time to wrap up. And on time, I think that we've had a cohort where we've been very on time this time around. We've done a whole host of aggregating over here, tallied all of the different results. We've had one additional person come in and make sure that they're audited. And I want to share with you what the prizes are. So we've got some very exciting cohorts lined up. We have some people, some friends over here from our upcoming sales fellowship. We have another very, very interesting venture capital fellowship that will be launching very soon. And so if you are part of the winning group, the IC champion winning group, each member of your group will receive a 50% discount off of your next CatalyzU program. This also includes a VC or a case prep session for your upcoming interviews. With that being said, I'm going to shift over to our People's Champion. Very similar, 30% off your next CatalyzU program. Okay, moment of truth. I was very, very quick. Surprised me there. Katisi, I want to say well done. And I see the glasses are coming on. I'm going to give you guys the opportunity to say one or two things. Anyone from your group, everyone from your group. I'll allow you to unmute and say whatever you would like to say over here. Congratulations.
Thank you. I think this wouldn't have been possible without my amazing group. Nelly, Chimo, Simba. I'm from a different time zone. I'm in IST. I have spoilt my nights practicing a 10-minute pitch, making it absolutely perfect. And I mean, everyone has been working so hard. This line is not going so good. This is going so good. And we were totally screwed when we thought that we understood something about the 11th March presentation, and it was it was not, but we decided that we will keep it because it is what Katisi's USP is. And I would love to tell you what Katisi stands for. Those are the three I just randomly picked my wonderful team members first two names and made it Katisi. So I'm so glad that all the hard work came to its fruition. I'll give it to Simba, Chimo, and Nelly. They've been so amazing. Loved. This is the dream team. Loved it.
Well done, well done. Simba, Nelly, Chimao,
Yep.
Well done. Simba, if you want to say anything, go ahead. Otherwise,
just a massive congratulations, team. Really, really well done. Amazing work. And thank you as well to everyone on the cohort and CatalyzU for the opportunity. It's been fascinating and a great experience. Thank you as well to the lecturers and the investment committee. Appreciate it.
Thank you.
Thank you so much to the team. This was a surprise because there were so many great presentations, but it's a complete surprise. We even going through the presentation and seeing what the other teams have presented and what they brought out, it's clear that this must have been a very tight, it must have been a very tight and a very hard pick, even for the investment team. And to my team, thank you so much for putting the time. Our time zones were completely different, but we took the time and we put in so much work. And to Simba and Sakshi, thank you for representing the team and for doing an excellent job at it. Thank you.
Congratulations, everyone. I echo that. Really enjoyed the journey that you took us through, especially the deep dive into Duca. So let me say that. Jamal, I don't know if you want to say anything before I shift over.
Yes, many thanks for all my teams. We're working really, really hard at different time zones, but we did it. I'm so happy for this because I have to wake up every time at like 6 o'clock to do some meeting. It's really hard, but we did it. And thank you for the lecture, everything we learned many things, and yeah, thank you for everything.
Well worth it. Well done, team. We have one more winner to announce. If I can maybe build up the tension a little bit more, a little bit better this time round. Here we go. Our people's champion is none other than, okay, Popelo. Well done. Congrats. Yes. Bongi, I'm gonna give you the opportunity to say something over here. Do a little bit of a dance. I'm here with you. I'll join in.
Yay! Okay, what you guys don't know. Can you hear me?
Loud and clear.
Oh, what you guys don't know is that we had an honorary member of the Bupelo team, being my 3-year-old son, who would join in and disturb some of the meetings. So firstly, thank you to Nick, Aya, and Ibukun. We had so much fun and such cohesion in this team. We had each other's backs. We also had different time zones. It was just a lot of fun getting to know each other. We've got different experience, different background. And I think what we did well is lean on each other's strengths. And a few of us had some life issues happening during the capstone project. But because we had such a good team spirit, I think we managed. So well done, Bupelo team. So proud of us. Thank you, guys.
Where are we going to see the honorary member before you
I'll try get him quickly, yeah.
Nick, anything you want to say other than well done?
Oh yeah, for sure. Other than just like the simple congratulatory message to my fellow teammates, I think it's just to everyone else from the Group 8 cohort. I think just across the board, amazing presentations. I actually learned quite a bit from other people's presentations as well. So thanks to you guys again for putting us as the people's champ for this one. So yeah, thanks everyone.
Thank you very much, Nick. I was waving there at the honorary member. And I just want to say well done to everyone. This has been quite the journey, and we find ourselves at the end of this cohort, moving on to the next cohort, but it's not goodbye to CatalyzU. It never is. It's welcome into our alum, and we love our alumnus. We learn a lot. I think Nick put it very well. Peer-to-peer learning is something that we really believe in, and that's something that we're going to continue trying to foster in the alumni community. And yeah, thank you very much to all of our lecturers and our IC members, both our lecture IC members and the other IC members. And with that being said, everyone, I'm going to wrap up, and you'll be hearing from us in your end of the week email again tomorrow to wrap everything up, your certificates and everything else. So a farewell and a goodbye for now until we say hello again. Ciao, ciao.